All right, back to the debt service fund. We're just going back and forth between these two. Whenever the sale of the bond results in a premium, so this is the extra cash received, the premium is transferred to the debt service fund, which accounts for interest and principal payments on the bond. This is the case with our current example from the last slide. So right here, journal entry to transfer the bond issue premium to the debt service fund. So yes, awesome. We did get $160,000 of extra cash, but we're putting that right back into the debt service fund and reducing the cash from the capital projects fund. Now let's say that the bonds were sold at a discount rather than a premium. Either the project would have to be reduced by the amount of the discount, or the funding shortfall could be transferred in from another source. So if we didn't get that full $4 million, maybe we just spend less, right? But no, we're the government, so we're going to spend more and probably get it from somewhere else, transfer it in from another source, something like that. Now, what if the project gets delayed and the bond proceeds are not used for construction right away, which construction is their intended use? Well, rather than have those proceeds sit unproductive and just sit in a bank account and make no money, they might be invested. So let's say the $4 million of bond proceeds is invested in a money market fund that earned $80,000. The dividend or interest, or the earnings on that money market fund, are then transferred to the debt service fund because the capital projects fund is used for construction. Any of that earnings or investments or anything like that is transferred back to your debt service fund. And right here, wouldn't you know it, here it is. Now, our project's delayed. We do have our $4 million, but we can't start it yet. So this is us using the cash, right? We credit cash, we got rid of cash. And what did we get in return? We got an investment in a certificate of deposit. If you don't know what certificate of deposit is, we talk about that more in other sections, the investment section. More so just a super safe, liquid way to invest your money for a low interest rate. So $4 million. Now you've got some interest revenue earned on that investment. Okay, great. Well, you're going to debit cash because $80,000 of interest was earned. And then you credit revenue because that's earned immediately. You earned that interest income. Great. Just like, say it with me, just like corporate accounting. There we go, over and over. But we know we got to transfer it to the debt service fund. So journal entry to record the transfer to the debt service fund. We debit interfund transfer and credit cash, $80,000 there. And with all of this, I'm explaining it. Don't worry too much about it. You're not going to have to worry about, a massive sim on government journal entries. But to be honest, the reason I'm going over this so much is because these are great. Like, these are wonderful because they're so similar to corporate accounting, and you really don't get enough, even for me or anyone. Like, there's just not enough journal entry prep, mostly in this space. I mean, we're always working to increase and give you more journal entries to practice. But even if there were enough journal entries, I'd say there's always more, right? Always more you can be practicing. There's never enough to quench the thirst and teach you what you need to know there. All right. So to recap the debt service fund records the entries when money is received that is borrowed to finance the capital projects fund. Well, again, what if the cost of the building was less than the bond proceeds generated? This excess balance would remain in the capital projects fund until proper authorization is enacted for its disposition. So if we didn't need all the money, the government will come in, say we didn't need it, proper authorization, we send it back to the debt service fund, pay down that debt. What if the cost of the building was more than the bond proceeds generated? Well, as we said, the deficit would cause construction to stop until new funds are acquired. We'd get it from somewhere else. We'll find a way, right?